Welcome back to the channel, guys. It's me, Adam. In this video, we have lots to talk about. The first thing, Ethereum is still ripping, so we're going to take a look at that, as well as Bitcoin, the SPY, the NASDAQ, the Dow Jones. Gold and silver look interesting on the charts, as well as oil. We'll see what Cathie Wood said, as well as we'll take a look at a few options plays, LEAPS potential opportunities, depending on if it fits your risk tolerance. So before we do all of that, guys, if you're new to the channel, welcome aboard. Hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, precious metals, and we're investing for the long term. As well as always, smash that like button and let's get started. All right, taking a look at Ethereum on the 4-hour time frame. So last time we took a look at this back on Friday, we were still hovering right below the blue line. Since then, we've broken through it. And now let's see if previous resistance, which was the 33.50 mark, will now become the new support. And if that fails, then if the 20 or the 50 EMA will hold up. But it still is an encouraging sign, even if we coil up over here. Next stop will be 3,600 if we can break that. After that will be 4,000, the peak that we hit back in September. After we hit that peak, if we're still able to go, I know we're still a ways away from that, then we're looking at the all-time high back from May earlier this year when we hit 4,400. So we still have to see more from the price action, but again, 4,400 is in sight if we're able to continue this uptrend. Taking a look at Bitcoin as well at the 4-hour time frame. So this could have been a potential base over here, and it's encouraging to see the price coil over here. The buyers are stepping up around 4,700 or so. So if we continue seeing support around this level, as well as the 20 and the 50 EMA, the next stop for Bitcoin will be in the 50s, and then if we're able to break, let's say 53,000, then we're looking back at our all-time high potentially. When we zoom out on the weekly, we see over here the $53,000 mark, and then after that, the all-time high from back in May over here. So encouraging signs from crypto. We'll keep an eye on it over the upcoming weeks. Taking a look at the FAANG index, which is the Facebook, Apple, Amazon, Netflix, and Google. This is on the weekly time frame. We see here the red line, guys, is the 20 EMA. And this is dating back to about September of last year when we had that big correction. When we fell all the way to the 20 EMA, and then we found pretty much buying support along the way. Maybe over here we dipped a little bit. We didn't touch the 50 EMA, and then right now we're right at that point. So it is a very interesting spot for big technology. This could be a bottoming sign, maybe a little bit below like we saw this year in February. But if we're in any kind of bigger kind of correction, maybe we'll be hitting the bottom of this trend line over here that we hit last year, which coincides very nicely with the 50 EMA as well, which would be a very strong buying point for the FAANG index. If it gets to that point, it would be a screaming buying opportunity, or if it did break that point, then it would be very, very potentially ugly. But I don't think that's what the market wants to do these days. But you never know. Taking a look at the Dow, this one's kind of been trading sideways since April or so. Taking a look back over the past year and a half since the pandemic, we've touched the 50 EMA once, so that could be a potential buying opportunity as well if we dip below this channel over here. So we'll continue monitoring that one as well. Looking at the SPY, similar to the FAANG index as well. On the weekly, we're right on that 20 EMA on one of those trend lines over here, so it'll be interesting to monitor that if it breaks it or if we continue to recover. And similarly, the NASDAQ, again, looks like the FAANG, looks like the SPY, right on that 50 EMA. I mean, the biggest companies from the FAANG index make up so much of the SPY and the NASDAQ, so I mean, it makes sense, right? All right, taking a look at gold right now, we're still at 1750 or so. We have a really strong support line at 1675. We hit the low point last week at 1750, so pretty close by. This could be an interesting buying zone within this area over here if we're able to recover. But if gold does break the 1675 zone, then it could get a little bit uglier and the downtrend can continue. So again, gold is something interesting to monitor as well. And looking at silver, this one is right on its support line. So if you do want to buy silver and you are bullish, this would be an interesting zone as well, assuming it doesn't break. Then it could be a little bit ugly, but silver could be a very interesting buy at these levels over here. As we are at the bottom of this channel that dates back to all the way of summer of last year. And before we take a look at oil, guys, I want to point our attention to Cathie Wood comparing current crude market to whale oil, predicts it will meet the same fate. So I remember listening to Cathie Wood earlier this year in 2021 saying that she would be very surprised, her and ARK Invest, if oil were to cross $80 a barrel, as it has been in a downtrend, making lower highs over the past decade or so. Since 2009, 2010, we see the lower highs over here and the lower highs recently in the past half decade or so. You see online Bloomberg, Financial Post, oil may hit $100 this winter. and spur economic crisis. So it is interesting to see both sides of the debate. And I know also that Cathie is saying that instead of inflation that we're seeing, deflation is our biggest risk in the short term. Like, as she believes that inflation is only here to stay and it's very transitory, and then we're going to be facing extreme deflation as a result of all the disruptive innovation that we're going to be seeing over the next decade. So it's a very different tune than what most people are saying right now. So again, the charts are interesting. What if we have some kind of double top over here at the $78 mark? So it could be interesting. Maybe she's onto something, or she could be completely wrong and then see oil just blast through this resistance point over here. And that could be very interesting for oil if it's able to do that. And as the top over here from this year is the same price it's been at since the top of 2018. And I want to quickly turn your attention to the Apple stock, guys. So I want to take a sample options LEAPS call with Apple. So first looking at the chart first, then we'll take a look at the options second. Similar to the FAANG index, the SPY, QQQ, we see the same type of hammer candle. We see the same 20 EMA on that weekly because Apple makes such a big part of the FAANG index of the SPY and the QQQs. So as an Apple investor looking at the chart over here, you have to decide, where am I comfortable buying Apple shares? Is it here where we are right now at 140? Is it in between this channel over here at 135, maybe at the bottom at 130 or below? So that you have to decide for yourself. Again, timing the market is impossible. I mean, if the price does get over here, then it would be a very good buy. We just don't know if it's going to get there again, right? So that's why timing the market is so difficult. So I found this website over here, optionseducation.org. So I put an Apple over here. The price is 142.65. Let's put the strike at 145 and an expiration of January 2023. And calculate. With the delta of 52, and the theta is very low because, again, it's January 2023, guys, meaning the time value decreases much less than if the option was expiring this week or next week. And when we look at the delta, it pretty much means that as Apple goes up $1, our option price over here goes up 52 cents. So it's kind of also as if you have 52 Apple shares yourself. Pulling out a calculator, we see that right now the price of Apple is 142.65, and as if we have 52 shares, so that would be $7,417 worth of Apple. And taking a look at the graph of this particular option, and as a disclaimer, you should be doing your technical analysis on the stock itself. However, looking at this chart as well helps, because it doesn't always take into account volatility and whatnot. So for example, over here, guys, we see the option was at an all-time high back in January, but we know that Apple wasn't at an all-time high itself. It's because things were so volatile back earlier this year that the price of the option went up so much because the premium of the stock goes up when volatility increases. So over here, guys, we were at the all-time high for Apple, but because volatility wasn't as high as it was back in January, the price of the option was lower. So it's very, very, very important to be buying your options when volatility is as low as possible. I mean, you can do technical analysis. Some of the principles do apply. So really what's best is to look at both charts. We see a similar hammer candle over here and increased volume. So this could potentially be buyers buying up the dip. So interesting to see what happens, guys. But this is a potential Apple play. Again, this is an example, guys. And because it makes so much of the market, which has been depressed over the last 3 weeks or so, it could be a potential play on your radar. And that's the end of my video, guys. Let me know in the comments below whether you like this LEAPS option, what you think of the commodities right now with inflation, the price of silver, Bitcoin, Ethereum. Let me know in the comments below, guys. As well as always, subscribe, like, and I will see you guys in the next video.